Hey traders, Michael or 𝐼𝐴 here. You're here for another episode of Common Sense Market Analysis. Today's Turnaround Tuesday, September 16th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, she's finally taken a little breather from making new all-time highs. Today she's down 0.14%, another small ranging day for the spiders. But that's usually the case when we're leading up towards Kabuki Day, tomorrow. We are expected to decrease interest rates tomorrow, so we'll see if that's the case and what that means for the market. We've been having very small ranges recently, so we're essentially eating some time off the clock and building up the energy that's going to be released tomorrow. Where is that energy going to take us? Well, we don't exactly know, but we could put a few ideas on the board. One of those targets could be the 666 number, the devil's top. We are fairly close to it, so tomorrow she could run him up, grab the number, and then maybe even find some overhead resistance at that number. Let's go over the flip side situation. So if that is the case and she finds overhead resistance, what is the next place that she's going to want to head to on the downside? Well, we have to take into consideration that we are very extended from home base. We've just been grinding up higher for the last week or so. So we'll put that in our back pockets and save it for later. Not to mention we have some important pivot numbers down below. The medium-term pivot talked about last week at 647.21, and just take a look how it happens to coincide with the 20-period moving average. And then right underneath it we have the important long-term pivot at 643.45. Those could be key important targets on the downside, depending on which way the Fed wants to release the energy in the market. Also, not to mention, we're in a little bit of an on-time situation. We had one of our members, 𝐿𝐼𝐴, bring this up early in the morning, so you can thank him for this information, but taking this pivot low on September 2nd on the daily chart, so we'll go ahead and use the candle counter tool. Someone brought it up in the comments the other day. I think it's pretty neat, so thanks for that. And as we can see, from this pivot low to today's current candle, that marks the 10th candle. And the number 10 is indeed an important number. 10 is a nice round number. We count in multiples of 10. 1 decade is 10 years. 10 times 10 is 100. We have a $10 bill. We have 10 fingers. Why don't we have 11? There's the 10 commandments. It has symbolic meaning. Ben 10 had 10 aliens to start. That last one was a little bit of a joke, something from my childhood, but you get the point. So we're in an on-time situation. Now let's go over to the 4-hour chart. Now let's take another look. Here's the September 2nd candle, the pivot low, or a pivot low I should say, and we'll go from this to the current candle, and we can see that's 21. 21, as mentioned in a previous video, is important. You ever play blackjack? It's also called 21. 21 is a milestone birthday. It's the legal age to get hammered. Even though some people think, well, these are just numbers, big deal, they're not just numbers. They have more importance than you think. So we're in an on-time situation. We're on the 10th candle on the daily chart, 21st candle on the 4-hour chart. We got the Fed coming up tomorrow. You got a potential devil's top, a full circle / cycle moment up above. So it's safe to say that we got a lot of things cooking. Are we in the vicinity of a top? Or are we just dummy strong and we're going to continue going up higher until she doesn't want to anymore? And that definitely is an option that we need to keep in our back pockets. Let's go take a look at inside the numbers, starting with the 0 dark 30 stuff. So let's jump straight into it, starting with the morning pivot at 660.85. Now this was the pivot mentioned in the morning, but there was another number on the board that did indeed act as a pivot-ish number. And that number comes in at 660.05. This is the first support zone on the board. These are the two numbers you need to know. So right at the vertical line is today's activity. The pivots are in green. This wasn't necessarily called out to be a pivot, but I was explaining that it certainly had the properties of being a pivot number, closing above and below. So as you could see right from the jump, here was the front end number of the support zone. She pretty much blew right through it, managed to touch the back end number pretty much on the penny the first time around, didn't provide the full base hit. Base hits are generally 50 to 70 SPY cents or 5 to 7 ES points. So she came back down, spiked it by a little bit, and then ripped it back up for the bare minimum base hit. This was indeed the bare minimum. So if we scroll up to the intraday notes, you can see that I started to say that the longer we spend underneath 660, the pivot-ish number and close candles below, that is the bear case situation. So at 10:30, we had an hourly close below 660.05. That is the first sign of more bearish behavior. And then again, mentioned right above it, the longer we stay below 660.05 and the pivot, the next destination is towards 658.80. So we never got there to the next support number, but just take a look at what happened. As you can see, we started to close candles below the pivot. Never once closed above it in this area right here. Obviously towards the afternoon, we started to change directions, but I'm just talking about this area right here. So we started to close candles below, and she made her leg lower. She got down to a low of 659.21, then came back up, started to close candles above the pivot. As you can see, she tested it multiple times on the downside as we stayed above it. Look right here. Nailed it right here, spiked it right here, nailed. So even though this wasn't the original OG pivot in the morning, the OG pivot was the 660.85, but this certainly did have pivot-ish qualities. We use it as inflection points. Staying above is the bull case scenario, and staying below is the bear case situation. So we kept retesting that number, staying above it, and then she tried to make her way towards the main pivot number. Came up close, couldn't quite get there, and then where did she head right back to? The 660.05. And then played a little ping pong towards the end of the day. No one's trading this tape. This is a morning business. The best trades are in the morning, and we'll leave it at that. So you could pause the video, read the notes, and go back to the chart to double check the work. As you can see, there's a lot of intraday notes so that you're never missing a beat. You know exactly what's going on, where the next destination is, the current price action as to what's going on, and pretty much all of the above. And not to mention, we can never forget the stocks on the move. Today we had two. We had DDOG and Play. Play was the only one that hit its entry target. I know it says open right here. That's another glitch that we did indeed fix. But let's go take a look at what happened with Play, Dave & Buster's. First entry is 1947. And that's the only number that you need to know. 1947, spiked it by a few cents, and then ripped it right back up. Look at this, the first 5-minute candle of the day made a high of 21.20. We'll give that one a how do you like dem apples. So we had a few participants playing Dave & Buster's. So if you're interested in stocks on the move, the 13 different markets that we offer, now including Tesla, the numbers, the pivot numbers, the game plan for the SPY, if you're interested in any of that stuff, you need to go check out Inside the Numbers and the live room. And if you purchase the live room, we'll give you Inside the Numbers for free. That's an offer that you just can't beat. Speaking of offers that you can't beat, you can get the next swing trade completely free with an 87% win rate from our system, straight from the watch list. You get the stock, you get the entry targets, you get the profit targets, and the stop loss. Everything that you need for a high probability swing trade right from our system. The link is in the description below. Literally takes 5 seconds. You gotta get it while it's here. Alright, let's go ahead and take a look at Camp IWM. But real quick, don't forget to hit the like and subscribe button as it helps me and the channel out a lot. That would be greatly appreciated. So we pretty much had the flip situation for Camp IWM as we did yesterday. She was up 0.42% yesterday, and she's down 0.45%. So a little flip of the switch. She's currently working on the most recent breakup candle low. She did manage to find support at the vicinity of the low. Remember, it doesn't have to be the exact low, but it's around 20% of the low, which we can see. It's important to note that we still have the pivot number on the board that is in green, and that happens to coincide right with the 20-period moving average, which we are extended from. We haven't hit it in over a month. So that is the pivot number. As you guys know, I love my pivots. Staying above is the bull case scenario, but if we start to get below and close candles below, we're in for another leg lower. There's a few destinations that she could reach to on the downside. The first one that jumps out right in front of me is this big time breakup candle low that happens to coincide with the 50-period moving average. And then not to mention we have another one right here, and that happens to be the midpoint between this number right here and the pivot, the midpoint phenomenon. So those are some key destinations on the downside. What about staying above the pivot and closing candles above, which we are currently doing? Well, if you notice this box right here, this is the first overhead resistance zone that we have on the board. Now we did come up short the first time. That does constitute as a first time best time situation. The last time that happened with our previous overhead resistance zone, she went to the midpoint between the two. That certainly can be the case for this one, or she could reach the back end of the zone. But this is a place where the market shouldn't just waltz right through. Now, despite this being a good overhead resistance zone, I did the numbers, the mathematical work, but we also have to take into consideration that tomorrow is Kabuki Theater. And as you guys know, anything goes with Kabuki Day. We can jump right over the zone, we could just blow past it, we could hit it on the dot. There's a lot of possibilities that we need to take into consideration. There's a lot of stuff that can happen tomorrow. There's going to be some pent up energy released in the Fed meeting. It's another piece of variable risk that we normally try to eliminate. So with that said, just be careful. She could definitely hit this zone in the morning, possibly leading up into the Fed meeting, but it's never a good idea to stay in a trade during the Fed. She'll just whip you around until you can't take it anymore. Again, another piece of variable risk that we try to eliminate as traders. Alright, so what do we got in the transportation department? Now I know that there is quite a bit on the screen, but it's really not as complicated as you guys know. And for me, this is kind of a pet peeve. I like my chart to look as clean as possible with the least amount of stuff on it. Just from the bird's eye view, it looks a little bit intimidating, but I promise you it's not. We got the moving averages right here. We have this channel, the downward trend line, and the upward trend line creating this channel that we're trading within. And then right here, we can make this green actually. This is kind of a pivot-ish number. I got this number straight from the breakup candle low. And as you can see, that number was extremely important. Nailed it once, twice, 3 times, 4, spiked it, but always managed to close candles above until recently. We finally made a test of the 200 period moving average and then made it back up towards the 20. But over the past few days, on Friday we managed to close below it, yesterday we managed to close below it, and now today, look at the close. The close is 15,648. The number is 15,650. So we pretty much nailed it right on the dot. We're not going to split hairs over pennies. So the longer we close below that number, the more likely she's going to want to go back for another retest of the 200 period moving average, and then you got a lot of stuff down here. This is a support zone that we had on the board from yesterday, and I think I mentioned it last week as well, at 15,362 and 15,262. That also coincides with the 100 period moving average creeping upon it, and then not to mention you got the upwards trend line. So there certainly is a lot of support in this area right here. But the moment we start to close candles below the upward trend line, that is the first warning sign of some more downside potential. So that's what we got for the transportation department. Alright, what about the financials? Well, she's down 0.22% and she just managed to come up short of the most recent breakup candle low. One of the biggest ones that we see on the screen. That's definitely something that I always take note of. So we did come up short. That does constitute as a first time best time situation. So on the second time around, we're looking for a spike, potentially down to complete the unfinished business down below that happens to coincide with the 50 period moving average, and that number comes in at 52.70. It's also worth a mention that we did spike the 20 period moving average, and we did indeed close above it. So as of right now, the trend is your friend until she throws your shit out the window, until something changes. But for now, there's not really that much else to talk about for the XLF. There's nothing wrong with the overall structure of the market, just continuing to work on this breakup candle low. But if we're staying above the moving average and this low right here, then we're in the bull case scenario for another push higher. But that's what we got for XLF. Alright, what about the Qs? Well, she's down 0.08%, she's down 50 cents, not really that much movement today, and there's not really that much change from what we talked about yesterday. We're still above all the moving averages, obviously. We are extended from home base on the daily and weekly chart. We are super extended. We've been extended for quite some time now. And really, this is just one of those situations where we gotta wait and see what the Fed wants to do with the markets, where the energy wants to be released to. We've been penting up some energy that's going to be released tomorrow. Whether it's to the upside or the downside, we don't really know. We could get the best of both worlds, going up to potentially the 666 number in the spiders and then coming right back down. We don't really know what the game plan is. Anything can go for Kabuki Theater Day, so we're just gonna have to wait and see how it plays out. Last but not least, we got SMH shaking my head, the semiconductors smash mouth. She had a little bit of a rounding error today. She's up 0.01%, 4 cents on the day. Alright, whatever. She's really just been grinding up higher, making new all-time highs for the last week or so, just like the spiders and the Qs. We are extended from home base. A lot of different markets all across the board are extended from home base, and this certainly is something that we don't play around with because, as we know, markets don't like to be too extended from home base. Just wanted to throw this out there. We are in an on-time situation just like the spiders from this pivot low right here, and we count the candlesticks from the current one today. That is 10 bars. 10 is an important number. Have I told you guys how much I appreciate each and every one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Don't forget to like, comment, subscribe, as I greatly appreciate it. So with that said, I'm 𝐿𝐼𝐼𝐿. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. I hope each and every one of you have a great rest of your day. Stay safe and take care now, folks.